Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of half-year 2024 financial performance of select companies. Financial performance shows how effectively a company uses its core assets to generate revenue and profits. Investors need to assess a company's financial performance to make informed decisions about holding, selling, or buying more shares. The half-year results captures the company's performance for 2 quarters or 6 months. Hence, we are reviewing January to June 2024. Year-on-year means comparing the period this year to the corresponding period of the past year. For instance, H1 2024 versus H1 2023. Some of the selected sectors we will be reviewing include 1. Telecommunication sector. The telecommunication sector recorded a GDP growth rate of 6.3% year-on-year in Q1 2024, sustained its positive form across the 2 quoted companies on the NGX, MTN Nigeria and Airtel Africa, as the number of active mobile and data subscribers increased in H1 2024. However, both companies were impacted by the devaluation of the Naira. MTN's H1 2024 audited revenue grew by 33% year-on-year to 1.5 trillion Naira. However, loss after tax increased to 751 billion Naira in H1 2024, relative to 119 billion Naira in H1 2023, due to 888 billion Naira FX losses. As a result, MTNN recorded a negative shareholders' fund of 578 billion Naira. Similarly, Airtel Africa's 3-month 2024 unaudited April to June revenue declined by 16% year-on-year to $1.2 billion in Q1 2024 from $1.4 billion in Q1 2023. The decline was due to the Naira devaluation. However, it recorded a profit of $31 million relative to a loss of $151 million in Q1 2023. We expect a sustained growth rate to persist in this sector in 2024, driven by revenue from data and fintech. 2. The agriculture sector. The 2 listed companies in the Nigerian exchange reported strong earnings. Presco's unaudited H1 2024 revenue rose by 83% year-on-year to H1 2024, majorly from sales of crude and refined product. The rise can be further attributed to increased domestic patronage due to FX challenges which restricted imports. Similarly, PAT improved by 141% year-on-year to 50 billion Naira. Similarly, Okomu's revenue, 86% from oil palm and 14% from rubber, rose by 85% to 75 billion Naira, and PAT grew 25% to 20 billion Naira, despite 7 billion Naira exchange rate loss. 3. Oil and gas sector. Revenue grew stronger year-on-year across companies in the oil and gas sector. Seplat's revenue grew by 107% year-on-year to 575 billion Naira, and PAT improved by 461% to 244 billion Naira, bolstered by exchange rate depreciation and a stable oil production environment. Pipeline losses declined to 3.1% in H1 2024. The company declared an interim dividend of 3 cents, about 48 Naira per share, with a qualification of payment date of 13th August and 28th August 2024, respectively. Corn oil, 97% from white products and 3% from lubricants, sold to service stations, 59%, corporates, 30%, and aviation, 11% revenue, grew 107% and 93% year-on-year to 181 billion Naira and 529 billion Naira in H1 2024, respectively. Also, PAT rose by 28% and 134% year-on-year to 8 billion Naira and 21 billion Naira, respectively. 4. Fast-moving consumer goods. FMCG's sector. The fast-moving consumer goods recorded impressive growth in sales, traceable to the rise in the cost of products and not necessarily any increase in sales volume, as profitability was impacted by the high cost of sales due to high input costs, FX devaluation losses, and rising costs of doing business. Boa Foods, Flour mills, Nestle Nigeria and Dangote Sugar sales rose by 110%, 67%, 55% and 46% year-on-year to 674 billion naira, 763 billion naira, 406 billion naira and 296 billion naira respectively. Despite the FX loss of 28 billion naira, flour mills returned to profitability 6.9 billion naira in H1 2024 from a loss of 9.3 billion naira. Nestle and Dangote Sugar lost positions worsened by 177 billion naira and 144 billion naira in H1 2024 due to the FX loss of 318 billion naira and 193 billion naira respectively. However, Boa Foods PAT rose by 75% to 202 billion naira. 5. Cement sector. Revenue advanced across cement sector players by an average of 66% year-on-year due to sustained product demand. Dangote Cement, Boa Cement and Lafarge increased revenue by 85%, 65% and 50% year-on-year to 1.8 trillion naira, 363 billion naira, 296 billion naira respectively in H1 2024. However, PAT slowed down due to exchange rate devaluation, which affected their finance costs. Subsequently, Dangote Cement's PAT rose by 6% to 190 billion naira, while Boa Cement and Lafarge dipped by 46% and 17% to 34 billion naira and 29 billion naira respectively in H1 2024. Consequently, Dangote Cement's PAT rose by 6% to 190 billion naira, while Boa Cement and Lafarge dipped 46% and 17% to 34 billion naira and 29 billion naira respectively in H1 2024. The impact of FX has dampened the share prices of most of these companies. However, we believe the price impact is only short-term, about a year, given the fairly stable FX environment which presents long-term investment opportunities. Remember that investment in stocks may not guarantee capital preservation, but it can offer a higher return than fixed income. You can allocate a portion of your portfolio to stocks based on your risk appetite and age. Thank you for listening. Please join us same time next week for another exciting and interesting session. For comments and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed.